Hey everyone, February is actually here. Can you believe it? The first month of 2026 is already in the rear view mirror. This video is going to be extra special because you'll notice on the screen, I'm going to talk about what the forecast is for this year because, the stats came out from the forecast breakfast that Krebs puts on every year. And then I'm going to move into what happened in January. And if you watch this whole video, you'll be able to see, whether so far the experts, because there were two chief economists that came to this event, and they come with all kinds of information. And I'm going to go through a little bit of it to give you my take on it, which I think is good for you all to hear. And then, like I said, we'll see if January is shaping up to meet exactly what they expected it would do. So stick around for this video. I think you'll get a lot out of it. And let me know your thoughts after you watch it. All right, well, let's just dive in with some of the factors that the chief economists were talking about at this presentation that would potentially affect our real estate market. And you'll see on the screen here that, first of all, it's our economic summary. And they're predicting that the GDP for Alberta is going to drop to 2.1. And that's going to drop from 2.3 in 2025. And obviously, we're an energy province. We all know that energy always affects Alberta. And, oil in 2025, I guess, was averaging around $77 a barrel. They're predicting that it's going to average around $65 a barrel. Interestingly enough, oil has actually risen in January. So here's the forecast down here in the bottom left. As far as GDP goes, and you can see it's really 2.2 across the board they put down here, although they think it's going to be around 2.1. So that's down. I mean, that's not great news to see that. That's one factor. Let's move on to the next one. So the next thing they look at is employment. And of course, that's a really important one. And you'll notice they've got it at 0.4%, which is down because we saw employment actually go up. 4.3%. Unemployment rate looks like it's going to be relatively the same. They've got right here in the green here where they are predicting that we're going to have job gains. And that is healthcare and assistance, wholesale retail trade, finance, insurance, public administration, professional, scientific, technical, educational services, construction. That all looks pretty good. That was 2025. For 2026, they think the biggest gains are going to be transportation and warehousing, healthcare and social assistance, accommodation and food, primary and utilities. So in 2025, we did see job losses in accommodation and food services, manufacturing, business, building and support services, primary and utilities. We also saw, or what they're predicting in 2026 is that public administration and manufacturing is going to see some job loss. So nothing to mention here really on oil and gas, but I think we already know it goes without say if oil prices look good, or hey, if a pipeline all of a sudden got approved, that could really change Alberta's outlook really, really quickly. So to me, this isn't too bad as far as unemployment and the employment challenges that we're going to have in Alberta look pretty good. Well, people always talk about population growth for Calgary, and you can see down here in the bottom left, and the big years were 2022, 2023, and 2024. We had a lot of people move into Calgary. That dropped off considerably in 2025. And they're expecting that's going to stay relatively the same. So you can see our population growth is going to be about 1.3%. And when you look at the international migration into Calgary, it's not looking fantastic. It's looking below average. So we're definitely not going to have the migration that we did before, and that'll definitely affect the real estate market. However, there is one thing they didn't talk about, and I know that this is accurate because I live and breathe this every day. We have a lot of people that are in that age group of around 30, 35 years old, 38 years old. They've finished school, they now have a good job. They're at that time where it's looking to buy a home. And if you go back 25 years, a lot of those people were in their 20s when they were buying, but that seems to have moved more to their 30s now. But, they don't talk about this, but to me, there's a tremendous tremendous amount of people in Calgary that are in that age group that are looking to buy. So we can't ignore that. And to me, I'm seeing the evidence of it already. And I really don't believe that this population migration coming from other places is going to be that big of a factor for us in Calgary in 2026. That's just my personal opinion on it. All right, let's look at new home construction. And this is coming from CMHC. And it says up here that new home starts exceeded expectations in 2025 with levels nearing another record high. But as of November, starts of 26,439 were surpassing 2024's annual total of 24,369. So starts have been elevated since 2022 as the new home sector responded to the shortage of supply caused by the sudden increase of migration levels. However, with the number of migrants entering Calgary slowing and segments of the market showing signs of excess supply, we should start to see a pullback on new home starts in 2026. Now, let me just comment on that because I've seen this. That's really affected some of the newer areas around Calgary. It's definitely affected Airdrie, where you've got builders that are hanging on to some inventory that they would like to get rid of. And they have definitely made some price softening to make that happen. They really want to move this product. And it's bringing down the entire market. So it's pretty hard if you bought your home in Airdrie in 2023 and you paid $650,000 for it in 2023. Chances are, if your house was built in 2014, 2015, 2016, you wouldn't be able to get back what you paid for it 2 years ago because you could go to the builder and probably get something really similar size, brand new for about the same money. So that's what's really affected our market. These builders can be very aggressive. So I think we're gonna see some of that for sure. And I think if you're looking to buy in some of these areas, there's a real opportunity. If you're thinking of selling, this could be a little bit of pain for you right now because you just may not be able to get the numbers out of your house that you would like to get. But that being said, even if you bought 2 years ago and you think, oh, something changed, maybe a new child is coming and we need a bigger home, even though you may be selling at a lower price, maybe even less than you paid. But if you do the math and calculate the delta, so many people just lose sight of this. But the gain on the purchase, because the price have come down, can more than offset the loss that you may be taking. So if you are in that situation, well, quite frankly, any situation, you have questions about it, you can just reach out to me anytime. So let's just balance here the upside risk and the downside risk. So the upside, you can see right here, it says shifting stance with the federal government regarding regulatory barriers that impact the energy sector could support stronger than expected investment activity and improved confidence regarding our economic prospects. So let's not ignore that. That very well could happen in 2026, and things can change quickly in Calgary and in Alberta, especially when things shift in energy. And so this really could be an opportunity. The problem is a lot of times people wait and wait and wait because they have a little bit of fear and they think, well, let's just see what happens. And by the time the good news comes out, all of a sudden the market shifts. And if you're a buyer, you could find yourself very quickly competing for good listings. On the flip side, the downside risk, U.S. tariffs and renegotiation. Okay, this may be the most important chart for everybody that wants to see what the forecast is. Let's just take a look at where we were. You can see in 2023 that detached properties led the increase in pricing in 2023. They didn't lead the increase in pricing in 2024, but you notice that apartment condos actually led the pricing in 2024. And then all of a sudden 2025 comes and you can see that semi-detached apartment condos both fell in value, whereas the detached properties and the semi-detached were slightly above zero. So there was a slight growth in pricing. The prediction for 2026 is that we're going to see the detached properties are going to drop a little bit. We're going to see apartment condos drop even more significantly, and we're going to see row houses drop a little bit, and you're going to see that the semi-detached are probably going to be, slightly above zero. So that's their prediction. That's what the experts are predicting. And obviously, if you're an apartment condo owner and you want to sell, if this really is accurate, it may be better to sell sooner than later, because what they're looking at is a drop of about 3.5%. That's the most significant drop. The good news is it's not like the bottom of the bucket is falling out. We're just seeing a softer market, and that means there is going to be some opportunities. And I have been here before, and there's opportunities whether the prices are going up or the prices are going down. Sometimes people just don't think about that, but there are. And I mentioned earlier, if you're buying and selling at the same time, you may not get the price you're hoping for when you sell, but you got to really focus. In a market like this, you have to focus on what you can purchase. And that's the real advantage in a softer market. When prices are softening, you look for those situations where maybe the builder is being more negotiable. Maybe there is a seller that really needs to sell for whatever reason, and they know that the inventory is higher. It's a little tougher market, and they're going to be a little more aggressive on the price. So you can pick up these properties at a discount. Some stuff is going to be on sale. So you got to pay attention to that. And there are ways of finding these if you're good at it. I happen to be pretty good at it because I've done it for a long time, and I've learned a thing or two over the years. So again, reach out to me if you've got questions around that. All right, so let's look at this chart. It's a really good chart to look at. I love seeing this one because in blue here, you can see the months of supply that we have in Calgary. And it's pretty easy to understand that our supply levels haven't been this high since 2020. And whenever you have supply this high, you'll notice that prices tend to drop, because it is very, very simple. Real estate is so simple when it comes to supply and the demand. And the government of Canada, they've wanted this. I mean, they've really, I know the Liberal government definitely came out when they were campaigning last year and said, yeah, we need to have more housing to bring prices down. And it is happening right now. And there's been more building and we have more supply. I don't know that it was necessarily the government that created this, but it is what they were hoping would happen. And it has created a little bit of price softening as a result. So if you're a buyer, that's a good thing. And as I said, it's not maybe as great when you're a seller, but please, I'm repeating myself more than once now, there are opportunities in a market that's softening. So that being said, you can see why it was pretty easy for the forecast from the experts to predict that we're going to see some softening. Now, let's move up to this chart right here, and you'll see right now in 2025, that's how many properties we sold in January. And that's not a bad January for Calgary to do 1,449. This January, we dropped by 14.84% and only did 1,234. New listings, though, interestingly enough, 2785 compared to 2896. So we're down on new listings, but the active inventory, we're still sitting 20% higher than a year ago, 4391 compared to 3640. And that's a significant number because January typically is not a month that we see a lot of inventory because people generally do take their properties off the market. Everyone does the Christmas holiday season thing. And, January is one of those months where I don't think people want to even look at their wallet again until about the third week of January. So it tends to be more February when we start seeing more inventory. So that is definitely higher than normal. And that's not helping us when it comes to any price increases. So you can see right here, 3.56 months of supply compared to a year ago, 2.51. That's a 41% increase on months of supply. The benchmark price this is just January only, was 554,400, and that's down 4.71% from last year at 581. And the median price, $556, and that's down from $572. Average price is actually up, but I don't pay real attention to that because all you really need is some expensive properties to sell, and the average price goes up. So we've kicked off January, bottom line, with exactly what the experts were predicting: higher levels of inventory and lower levels of volume of sales. And but I will say this, just because there has been a lot of incentives coming from the builders, there's some people that have gone to new construction, and new construction doesn't show up on these numbers. So we may have actually had a stronger month when it comes to new home construction. And I'll put a plug in for myself on that just because I've helped a lot of people deal with builders. And I don't think a lot of people realize there is some risk to going to the builder without representation. You can't always think of every question that you should be asking. And it's not like the builders volunteer information to you. They just want to sell homes. So I don't necessarily think that they're trying to do it in a mischievous way, but they often leave out little pieces of information that you probably wanted to know. So it's good to reach out to someone like me when you want to be able to deal with the builder as well, because inevitably we'll point some things out, and you'll usually be thankful that you use someone like me to help you and navigate that whole transaction and advocate you at the same time. All right, I'm going to show you one last thing here before we wrap up this video. People often ask me, Rob, where are the best opportunities in this market? And for that answer to the question, I'm just going to show you this right here, because you can see that we've divided the city into 8 different sections. And you'll notice that the north is down 6.9%. The northeast is down 7.9%. And this is exactly what I'm talking about. You're competing with builders in both of these sections of Calgary. And it definitely has spilled over into Airdrie. I've also seen some softer prices even in Cochrane. So if you're looking for something in the north and you're looking for a pretty good deal, that's where I'd be looking. Not to say there's not other opportunities anywhere. There always can be opportunities. I'm just saying as a whole, that's where you might want to look. So hopefully this has been really helpful. I'm still pretty darn optimistic for 2026. I just have a feeling that Alberta's going to see some good news coming. I don't really know where it will be, but I just have a sneaky suspicious feeling it might be in the energy sector. And I know that that could also turn things around quickly. So to me, I absolutely believe that this is an extremely good time to be looking to buy a property in and around Calgary. Take advantage of this because it's not going to stay soft forever. Even if this was an entire year of being soft, it's not soft forever, and you can never pick a bottom. So I hope that helps. See you all next month.